In this video, I talk about the case study Pelzerhagen, which is a hairdresser saloon in Australia. We cover the balance sheet on both sides and the income statement as well. The case study Pelzerhagen Property Limited is a hairdresser saloon in Melbourne, in Australia. So the currency for this case study will be the Australian dollar. We use this case study in order to learn about profit and loss. So what we do at this stage is we introduce the so-called nominal accounts. Nominal accounts will be accounts that are linked to the profit and loss statement, which we refer to as the income statement. In our case, it will be about the rent, which is paid in order to run this hair salon in a mall. The company has to consider labor for the hairdressers, and we have to consider depreciation. In order to understand depreciation, we first have to record the acquisition of property, plant and equipment. In this case, for this hairdresser saloon, this will be the saloon appliances like a hairdryer, like straighteners, the shears and so on. After the acquisition, we have to consider that these assets will be used and they will lose their value by deployment, and this is recorded as a depreciation. We apply the easiest form of depreciation, which will be straight line method depreciation. So the assets will be bought at $50,000 and we will depreciate them every year by $10,000. Then at the end of the accounting period, we will record the revenue, which will increase the profit. In contrast to what we did before, we now have not only to focus on the balance sheet, but on the income statement as. In the case study Pelzerhagen Property Limited, we will discuss about a saloon, or a hairdresser saloon in Australia, and this saloon will have 4 business activities. So the activity 0 will be the establishment of the company, takes place on the 2nd of January in 2007. And the owners contribute $100,000. Now the first activity is an activity which is linked to the expenses. That activity is that the company will pay on the 2nd of January in 2007 the amount for rent in advance. So rent paid, and the amount is 3,400 Australian dollars, which is the annual rent. Now the activity number 2 takes place on the 30th of June, just to keep the case study a little bit simple, 2007. And the company will pay the hairdressers, so labor is paid to the extent of 48,000 Australian dollar. This is the entire labor for the year. Bookkeeping entry number 3 actually is split up into 2 parts. The first one is the acquisition of the saloon appliances. That will take place on the 3rd of January in 2007. Acquisition of hairdresser saloons appliances. So that would be like a hairdryer, a straightener, the shears and so on. And the amount here will be $50,000. We should keep in mind that the acquisition in the first place is only a payment, but it is not an expense. The expense only comes with the next activity, which is 3 Bravo. And this is depreciation. Depreciation will be recorded on the 31st of December in 2007. Depreciation on the appliances. And the amount will be 10,000. So we see here this will be straight line method for depreciation, and we write off the amount of 50,000 over 5 years, so that gives us 10,000 Australian dollar per year. Now the activity number 4 is the revenue, which is recorded here in order to keep it simple on the 31st of December in 2002. Revenue recognition, and the amount will be $130,000. So in the case study Pelzerhagen, we have to prepare the balance sheet as well as the income statement. So we have to prepare both of them. So we find them in this Excel sheet. So I just enter the name of the company, Pelzerhagen, Proprietary Limited. So the company is similar to a German GmbH, and we discuss about the balance sheet in 2007, which we record for the balance sheet date, which will be the 31st of December. Now in this case study, the reporting currency is the Australian dollar. We copy the currency to the income statement and we enter the name as well. Now we start with the first activity, which requires that we make entries on the balance sheet. So the company is established on the 2nd of January in 2007, and the owners will contribute an amount of 100,000. So the 100,000 will be recorded as a share capital, 100,000, and we record the amount at the same time as cash bank, as the money has been paid into the bank account of the company. The next activity is paying for rent. Now paying for rent will be recorded on the income statement and on the balance sheet at the same time. With regard to the balance sheet, we have to consider that there is a payment. So the payment will reduce the amount of cash bank by 3,400, which is the annual rent. The income statement will be recorded for the rent as other expenses, and we add the amount of negative 3,400 Australian dollars. Now what we can observe is that in the accounts, the earnings after the taxes will be 3,400, and this amount will be later on disclosed on the balance sheet. So for that reason, we link now our balance sheet to the income statement. So we just write here, retained earnings is earnings after taxes, and press enter. If we now want to observe the accounting equation and we combine the income statement with the balance sheet, then we will see that actually the accounting equation can be checked after each and every bookkeeping entry. Now, the 30th of June, the company pays for labor. Now, labor looks very similar to what we did before. So we have to consider an amount in the cash bank account. So we reduce the amount by 48,000, which is the amount for labor at Pelzerhagen. And at the same time, we record this one as an expense. So we put in 48,000. In our Excel sheet, we do it that way that we record the expenses as negative amounts and the revenue will later be recorded as a positive amount. We check now the balance sheet and we will see on both sides the total on the debit side and the total on the credit side is the same, so the accounting equation will be fulfilled. Now the company buys property, plant and equipment. Buying property, plant and equipment means this one is just an asset swap. So we buy PPE and we have to pay for it and we reduce the amount in the cash bank account. So we record this. So the amount here is 50,000. And we have to pay for this, and that means that we will have to record a reduction in the cash bank account to the extent of 50,000. We don't worry too much about the bank overdraft because it is just here for the case study, as we now have the acquisition at the beginning of the year and the revenue recognition at the end of the year. Now the asset has to be written off. To write off an asset means that we want to consider its deployment, and the deployment of the asset will result in a decrease of its value. So for that reason we will have here an item depreciation. So in the depreciation we just record negative 10,000 and the amount is to be deducted from the item of property, plant and equipment as its value decreases. There we go. Now the last item is now that the company receives revenue, and revenue recognition is recorded as a cash received. Here the amount is 130,000 and is to be recorded on the income statement as well. So the revenue recognition gives us a positive amount in revenues, so it is 130,000. Now we don't have materials in this case studies, we don't have other income, but we don't have even interest and deferred taxes either. But what we have here to consider is income tax expenses. A company that earns an amount of 68,600 Australian dollar has to pay 30% in income taxes. Now these income taxes will be recorded as an income tax liability on the balance sheet. So you find here income tax liabilities equals, and I take the amount of the income taxes and I transfer them to the balance sheet. So we see now we got an obligation to pay $20,580 to the Revenue Service in Australia, and as we can see by the yellow marked cells, the accounting equation is fulfilled. We have on both sides 168,600. Now, as you have seen, the way to record everything on the balance sheet and or on the income statement is kind of inconvenient, so it is much better to record this in accounts. Besides of the real accounts for the debit side and the credit side of the balance sheet, we now have to consider nominal accounts, and these nominal accounts will be for profit and loss. What we should keep in mind is that in the end, the profit will be recorded in the equity section under the retained earnings. Think about a positive profit. The positive profit will be recorded as a credit entry in the retained earnings account. If you keep this in mind, you will understand easily that every item which will increase the profit will lead to a credit entry, whereas every expense which we have to record, like for example here the rent, the labor and depreciation, must be recorded on the debit side of the nominal accounts. Now we want to record the activities of Pelzerhagen in the accounts, and for the accounts we just have the empty accounts in this case study, and these accounts now will be named in the sequence as we need the accounts. So we are going to start with the establishment of the company, so the owners will pay into the cash bank account and we will record the issued capital, so we need cash bank. The abbreviation Charlie/Bravo, and the issued capital India Sierra Sierra for issued. Now this one is not really a bookkeeping entry, so we record it as the opening value. So the opening value is recorded as Oscar Victor. It is here 100,000. Just do a copy paste into the issued capital account. So what we will see, the cash bank account is linked to the debit side, so an increase of the cash bank will be recorded as a debit entry. The issued capital is on the credit side. For that reason, any increase will be recorded by credit entry. So we got here in total 2 increases, one of the debit side and one of the credit side. Now the first activity now, which is linked to an expense, is relevant for rent. And before we record this, we just take a quick look at the balance sheet. On the balance sheet, the profit, let me put it like this, profit. The profit will be recorded and will be transferred to the balance sheet. So that is actually the thing what we now have to look at. And that means that the profit now will be linked to the credit side of the balance sheet. We learned already any increases of an item which is linked to the credit side will be recorded as credit entry, and decreases like expenses will be recorded on the debit side. For that reason, any expense must be recorded on the debit side. So our first expense is rent. In order to indicate that this one is a nominal account, we write down the year as well, 2007. And we use the abbreviation Romeo November Tango. Now the rent is paid on cash, so that means that we have to credit the cash bank account. Now we record the first bookkeeping entry for rent, 3,400. We make a debit entry in the rent account and we copy that one to the credit side of the cash bank account, as the amount of the bank on the cash on bank will decrease by this bookkeeping entry. Now the bookkeeping entry for labor looks very similar. So we create the account 2007 Lima Alpha Bravo, and the bookkeeping entry number 2 is recorded on the debit side, as this one is an expense. The amount here is 48,000. The amount is paid, and that means we have to credit the cash bank account. The acquisition of the saloon appliances will be recorded as property, plant and equipment. Papa Papa Echo. So we record this as a bookkeeping entry 3 Alpha. Now the amount is 50,000 and the amount is paid by a bank transfer, so for that reason we decrease the amount in the bank account, and that means we have to make a credit entry. The asset is on the debit side, and for that reason any increase will be recorded by debit entries. Now we record depreciation. So for depreciation we have to record an expense, depreciation, in 2007. So the abbreviation is Delta Papa Romeo. So this one is the bookkeeping entry 3 Bravo. It's 10,000. And we will record the contra entry in property, plant and equipment, as this amount will be decreased. Now the last item we have to record is the revenue. So the revenue will increase the profit. For that reason the revenue will be recorded on the credit side. So I start an account which is revenue in 2007. Romeo Echo Victor, and we record the bookkeeping entry number 4, which is 130,000. This was a credit entry because we want to increase the profit and we increase cash bank at the same time, so that means we have to make a debit entry in the cash bank account. So far we recorded these bookkeeping entries, and now we want to balance off all our accounts. We actually need a little bit more lines here, so I'll just balance off the cash bank account and all the other accounts. Balancing of a nominal account is not different to balancing of an account for the balance sheet, which we will refer to as real account. Carried down 3,400, brought down 3,400. Same with labor. Carried down 48,000. Brought down 48,000, and we mark the first line, which represents here the sum. So the amount is 50,000 less these 10,000. So we mark it here as a sum and brought down to the opposite side, which is 40,000. Now, once we have to consider profit and loss, the difference to the previous case studies is now that we first have to prepare an income statement, which means we have to set up a profit and loss account. The profit and loss account itself is a nominal account, so it's linked to the income statement. So we write profit and loss account. Normally we just use this sign, profit and loss. In 2007, Papa and Lima. Now the bookkeeping entries we have to record will be recorded not by an identifier but by the 3-letter code of the contra account. We will start with the rent account. So the rent account will be transferred to the profit and loss account. There is an expression in English that says that is to close off an account. To close off an account means we make a bookkeeping entry that way that the balancing figure of the account becomes 0. So to zero balance the rent account, we have to add a credit entry in the rent account to the extent of 3,400. Now the contra account is the profit and loss account. Now, as we made a credit entry, we must make a debit entry. So the contra entry is Romeo November Tango, and it is 3,400 for rent. After we made this bookkeeping entry, the rent account is zero balance. That means we are no longer interested in this account, and in order to just not delete it but to mark it as not necessary anymore, we gray it out. So that means in the end, once we want to prepare the balance sheet, we don't have to worry about this rent account. Now we close off the labor account as well. So profit and loss, 48,000. The account is zero balance and can be grayed out, and we record here labor 48,000. The next item here is depreciation. So we close off the depreciation account by recording a credit entry to the extent of 10,000, and we make a contra entry on the debit side, depreciation, and it is 10,000. Now the depreciation account got closed off and we gray it out. We do the same with the revenue account, but now the revenue account will give us in the profit and loss account a credit entry, as this will increase the profit, and we have to make a debit entry as a contra entry. So we will record here profit and loss 130,000, and the contra entry by the name of revenue is recorded in the profit and loss account. At this stage, I will be able to calculate how much is the profit. Before I start to do so, I will gray out my revenue account, so all the figures will now appear in gray. Now the profit is the difference between the revenue and all the expenses. So we record this by balancing of the profit and loss account. Now what we get is actually now the earnings before taxation. And in order to indicate that we calculated this by balancing of the account, we write carried down. Now obviously we do not have so much space, so for that reason we just use the abbreviation earnings before taxes, and we delete all the other things before. So we keep in mind that this amount here has been calculated by balancing of the account. So we quickly do this. 130 less the expenses will give me the profit before taxation. Now we have to record balance brought down, and it is the 68,600. Now out of the 68,600 we have to pay taxes. So for that reason we have to record the income tax liabilities, and the amount will be 30% multiplied by the pre-tax profit, so it gives me 20,580, and this one is a bookkeeping entry. So I make a debit entry in the profit and loss account, and the contra entry will be recorded on the credit side of the income tax liabilities account. Which is a real account, and the abbreviation is India Tango Lima. So I write here profit and loss, and it's 20,580. Now a further account which we want to have in use is the retained earnings account, R/E. And we write here Romeo Echo, and this one will give us 70% multiplied by the pre-tax profit, and this is 48,020. So we write down here profit and loss, and the amount is 48,020. Now if we check the profit and loss account, we can find out easily that this account here will be zero balance. So we took 30 and 70%, so this adds up to 100%. So on both sides we will get the 68,000, so the account is zero balance, and that means that we can gray it out as well. Now I only have to balance off my income tax liabilities account, $20,580, brought down $20,580. I do the same for the retained earnings, carried down, equals 48,020, brought down 4820 Australian dollars. So I mark this line here, and these are actually, there is the recording of the accounts. Now the items which you will find in the profit and loss account can be just transferred to the income statement. Now on the income statement you won't find an item for rent, so we just record this as other expenses. Otherwise labor and depreciation will be on the list on the income statement. Same with actually the income tax expenses. We do this by the reference function of Microsoft Excel. So we open the income statement, so it is here already prepared. The name has been entered, the year and the currency. Now our revenue will be the amount as it has been entered on the profit and loss account. It's 130. Now keep in mind we want to record the expenses as negative amounts, so for that reason I just use the minus sign, and I take the amount from the worksheet here, and labor is 48,000. The depreciation is negative 10,000. We just take it out of the account, and the other expenses is only here for rent, so we take the amount negative 3,400. It's further up. Rent, there it is. Now we see the pre-tax profit, and as you can see here, the income statement calculates already the income tax expenses to the extent of 20,580. We quickly compare this to the account, and you will see there 20,580. Now after I did this, I can prepare my balance sheet. So the balance sheet now will show me the item of property, plant and equipment. So I just get it from the account. Property, plant and equipment is 40,000. Intangibles we don't have, financial assets we don't have, inventories we don't have, receivables does not matter, prepaid expenses doesn't matter. But we got cash bank, so I take it from the account. It is here 128,600. Now the share capital, we get it from our account worksheet, is 100,000. With regard to the profit, I can now write retained earnings. The amount is taken from the account. The amount is positive as the company made a profit. And we got the income tax liabilities. So the income tax liabilities will be to the extent of the 20,580. Now as we can see instantly, the accounting equation is fulfilled. Both sides will show me the same amount, and so we are happy that the accounting equation has been fulfilled. That means that most likely we calculated correctly. So we write down the bookkeeping entries for the case study Pelzerhagen Proprietary Limited. The first bookkeeping entry is not really counting, so for that reason we don't give it a number. It's the establishment of the company. So on the 2nd of January, the owners will contribute $100,000. So we record this as an increase in the cash bank account. $100,000, and the credit entry is in issued capital. Now the first activity will be the rent. So this is an expense, and an expense is recorded on the debit side. On the 2nd of January in 2007, Pelzerhagen Property Limited pays the rent $3,400. Now the rent is an expense which we want to record on the debit side. Rent, it's $3,400, and the credit entry is in cash bank. 3,400 Australian dollars. Now the second activity is very similar to the first one, so we have to consider labor. We want to record this in the middle of the year to keep the case study simple. So on the 30th of June in 2007, pays labor $48,000. So the labor is an expense, so we have to record it on the debit side. Labor, $48,000 Australian dollars, and the credit entry is in cash bank. Now the third bookkeeping entry is actually, this will be two bookkeeping entries. So the first one is the acquisition, and the second one is depreciation of the hairdresser appliances. So 3A is the acquisition. It's on the 3rd of January. Buys hairdresser saloon appliances for $50,000 Australian dollar. So we make a debit entry for the property, plant and equipment account. Debit entry, property, plant and equipment. $50,000 Australian dollars, and the credit entry is in cash bank. $50,000 Australian dollars. Now the bookkeeping entry 3 Bravo is about the depreciation, which is an expense. Normally depreciation will be recorded on the 31st of December in 2007. Recording of depreciation. So the depreciation again is an expense, so we make a debit entry, depreciation $10,000 Australian dollars, and the credit entry is in the property, plant and equipment account, which decreases because the value will shrink by the deployment of the appliances. 10,000 Australian dollars. Now we terminated the revenue recognition at the end of the accounting period, so that's bookkeeping entry number 4, revenue recognition on the 31st of December in 2007. Revenue recognition. To the extent of 130,000 Australian dollars. Now the revenue recognition is the opposite of an expense, so we have to record the revenue on the credit side. On the debit side, we record the increase of cash bank. 130,000 Australian dollars and the credit entry in the revenue account. So these are the initial bookkeeping entries which will be relevant for our case study. As a part of the adjustment and for the profit calculation, the company makes some further bookkeeping entries, but these bookkeeping entries will not be seen as the original bookkeeping entries. So for that reason we do not record them here, so you will record them by preparing the profit and loss account. Now we completed the case study, Pelzerhagen Proprietary Limited, which is our Australian hairdresser salon. We learned about the nominal accounts and how to prepare an income statement. In order to understand this case study, feel free to read in our Basics of Accounting about this case study Pelzerhagen. You will find it in the chapters 9, 11 and 12.